May profits be upon you. It's been a minute. Sorry. But I'm back. Check it out. What do I have here? Got this arrow pointing to nowhere over here. This is not a trend line. This is buy side liquidity. Why am I pointing that out? Because up here, you'll see these points here, these wick tops. All right. The wick highs contain stop losses. Stop losses for people that are taking shorts and pending orders for people who are waiting for those breakout trades to go long. And what liquidity does, or what the markets like to do, excuse me, is come and tap into these uh, liquidity pools so that they can make a move, a more significant move in the other direction more than oftentimes, or if they're just sweeping. Like what price likes to do is generate orders this way, generate liquidity this way by going up and down, and leaving these points here. At all these points, there's liquidity pools. All right, people taking longs, people taking shorts, right, and the market makers will come down, trigger the people that are going long, that are going short, all right, trigger them, and take out people who are taking longs with one wick down. Boop, just like that. Just like that. It took all the liquidity from this wick low. Took all the liquidity from there. Stopped out the people that are in longs, and triggered people who are in waiting for the breakout trade to take shorts. And went the opposite way. Took their stop losses here. It's all about stop losses. All right. And what do we have here in this market? If we go to the daily, you'll see prices impulsed high, breaking all these highs. We're in all time highs up here, right? And now we have a pullback. Come on now, what's going on with my screen? All right, we have a pullback, right? We have that pullback here. All right, breaking this low. All right, this higher low led to that higher high. All right, just like this one led to that. Right, you're looking for structural breaks. All right, I like to see a two candle pullback for for to count it as a structure. But in this case, we do have the break of this low, this swing low, and that's important. Why? Because after a break, a significant break of structure, or two short-term lows, I look for a return to impulse, and that's exactly what happened here. Price returned to the impulsing bearish order block that created the impulse that broke that short-term low, or or that break of structure. Excuse me. I don't know what just happened there. All right. So price returned to impulse and then continued low, continued the bearish momentum. All right. Now we're going down to the 4 hour, and you can see what price did on the way down, generating liquidity, right? And then I got this too small. I'm sorry. All right. Generating liquidity, making those points, making higher points. And what does it do? It sweeps the highs here, all right, runs those highs, and then comes down to sweep the lows. Boom. And does the process again. Sweeps the highs before the significant move down, sweeping the lows, and keep the bearish momentum going. All right. So after the return to impulse over here, we see price just made a very aggressive drop, a lovely aggressive bearish drop down to this 12-hour order block down here. Okay. All right, which we see here, this bullish order block. And that's what you want to see. You want to see the ceiling, you want to see the floor. All right. Now, if we go down to the 15, first of all, before I do that, what am I thinking here? All right. We broke this structural low here. This low is responsible for that lower high. Okay. All right. And we broke that high, all right, to make Still we have a lower high, lower relative to this one. So what you see is the higher time frame structure. This low here made that higher high, then a higher low, looks like, relative to this one, but it didn't make a higher high. That's what higher lows do. They lead to higher highs. This isn't a higher low. Then what is it? It's a swing low. It's a liquidity point, and this became a lower high. And once we broke this, now we're making a lower low, right? And this is a break of structure. So what am I expecting after a break of structure? Just like what I went through over here on the higher time frames, I expect a return to impulse. I'm expecting price to move up. All right, now watch. If we go down to the 15, what am I looking for? This is my POI, this 12-hour order block that I had pointed out earlier. All right, this is my POI. So what am I looking for? I'm looking for price to transition from bearish to bullish momentum. All right, and I'm going to look for that in the candlestick patterns. All right, I'm looking for price to transition. Okay, and what pattern shows the transition? What pattern is my bread and butter? It is the inverted head and shoulders, or the inverted Quasimodo. All right. I'm looking for a left shoulder. Oh, come on, man. Why you embarrass me like that? I'm looking for a left shoulder. I'm looking for a head. And I'm looking for a right shoulder. Did I say left shoulder? This is a right shoulder, head, left shoulder, right, left, right. I'm looking for this shoulder right here on the right. Doggone it. All right. So, and that's what I'm looking for right here. I was hoping that this would come down a little further. And so I'm going to be patient with it because I believe it will. Once it hits this imbalance, what is an imbalance? An imbalance is an inefficient move of price. What does that mean? This is all bearish. This is all sells. All right. Price doesn't like to move that way. It will come back to the wick on the opposite side of the candle we're talking about, like this one. It's the wick is measured from wick on the left side and the wick on the right side. That's how this inefficient move is measured. All right, and we have a string of them here. So price, once it hits the beginning, sometimes it likes to reverse and then come back and fill in this gap like it did here. This is a fair value gap. That's why I refer to it as a gap. All right, the inefficient move of price or imbalance. It likes to come back and balance what is imbalance. You understand? Sells. Now we have the buys. All right. Same thing here. Boom. Price will come back and fill it in. Price will come back and fill that gap in. So I'm looking at price. Look at it. It's turning bearish here. The reason why I think it's coming down is because we swept all of this liquidity that it built up coming down here. Look at the tops. All right. Price worked its way up. Took out, ran those highs. All right. Up here. And now we have a break of structure, short-term lows. One, two. I should draw them out. One, two, three. Short-term lows. Return to structure. I'm looking for price to start doing this and then come down and, like this blue arrow depicts, give me my right shoulder and continue up. That's what I'm looking for. Can you dig that? We're going to see. All right. I don't like a whole lot of stuff on my thing, but that's what I'm looking for. It doesn't necessarily have to happen, but I believe we see price transitioning with that break of structure. All right. If price comes on down, return to impulse. That's what I'm looking for. Okay. Got a couple of different return to impulse situations going on here. I'm just hoping it makes it down here. All right. Because that's what that would be best. Anyway, that's my outlook for US30. We'll see what happens. I'll see you in the next video.